region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Hello, good morning, and welcome everyone. It is Monday, October 27th, and this is the AgYield War Room. I, of course, am AgYield's marketing manager, everyone's favorite backup host, and Dan Dempsey's only real competition on a golf course, Jack Coakley. If you have any questions or comments, please feel free to join the discussion. Post comment anywhere you see fit, and we're always answering your questions or comments at info@agyield.com. Without further ado, let's go to Brian with some overnight numbers.
Good morning. Thanks, everybody. Looks like the markets were very strong overnight with the framework of a possible trade deal with China. We'll see how that all frames out. Still have to meet on Thursday. So D's corn up 6.5 at 429 3/4. Nove beans up 23 at 1064 3/4, and D Chicago wheat up 12.5 at 525.
Thanks, Brian. Yes, absolutely. Let's go jump into the discussion. You know, the U.S.-China Jim and Pam from The Office, will they, won't they, trade war whiplash, merry-go-round continues. That's the only way I can and read it. So, Justin, what's your take on it?
Yeah, I mean, I think there's, obviously been discussions back and forth on, what'll happen. I think there was some level of this baked in as far as like it could happen, but now that it's actually happening, we were talking about before the show. I mean, beans are, basically almost 12-month highs. The high end of the range, you start getting, another 10 cents higher than where we were overnight. You're taking out over a year's worth of highs. Wheat overnight above the 50-day for the first time in 3 or 4 months. Corn beating on the door of multi-month highs. So, it's one of those things where, in my opinion, like spectators, people that have been trying to be short, probably going to throw in the towel, kind of frustrated with, not getting paid. You're getting in the tail end of harvest. I don't know. I mean, again, the devil's in the details on what actually happens. So short term, I think pretty positive. And then, the big debate's going to be medium to long term. Is it sustainable? I mean, you're going to force China to buy beans. I don't know how it's all going to work on a grander scheme, personally. They've already bought a ton of South American beans. Their crush margins are kind of negative, not very good. So I guess the government, the Chinese government could go buy, 10 million tons or something for government reserves. But where does that leave you, I guess, medium to long term? I said before the show, I thought it's probably pretty friendly, like new crop corn, for example, in my opinion, because, the big thing was like, oh, we're not going to be able to sell our beans out forward. I have to keep planting more corn. We had a massive corn acreage number this year. So maybe it brings more balance into, next year's planting intentions. And, to be bearish corn at these levels, you had, basically 100-year high in planted acreage and a ridiculously high yield estimate to make corn bearish. And it's still acting pretty good. And we've had good demand. So do you see a natural rotation out of corn, which would make sense, especially if you have an optimistic bean program out forward? Just trying to shine some light on some, what's been kind of negative sentiment here. Maybe out forward it looks more friendly.
Certainly. Dustin, let's shoot it over to you. Get your thoughts.
Yeah, same ideas here. I mean, hard assets have also not been performing very well. I'm sorry, the hard assets been performing very well against the dollar. So, you still have really, really high cost structures for, globally now. We've exported a lot of these costs with Brazil, their currency starting to actually find support against the dollar this year compared to last year's disaster. So I agree with Justin. I think that the price of the output may just need to rise, the back end of the market, especially for corn. And you just think about 30 years ago, we had corn in the 2s and 3s, right? And then it goes into the 3s and 4s. And maybe it is that just the benchmark price of corn needs to be above 450 at some point to keep getting enough acres going forward, because all these other cost structures just simply cannot come down enough for global producers to make that make sense to grow it. Unless we see just continuing trendline yield increases well beyond the rate of actual inflation. But what's happened to the dollar in the last 5-10 years? All of a sudden gold's double what the all-time previous high was, in the last year and a half. I don't know. I agree with Justin. I think the back end be where some of the interesting spots come in. I'd like to see what the details are of this too, right? We have some very vague statements from Besant. Trump is going to be the one to announce this apparently. And is it exactly like the phase 1 trade deal? Because if it is, that's not just support of beans, it's also support of corn too. Because they're probably not going to buy $50 billion worth of beans only. So it'll be interesting in the short run to see what this week brings.
Yeah, certainly. Thanks for that, Dustin. Ben, let's shoot it over to you.
Yeah, just looking at it from a true market perspective, well above moving averages in beans, slightly above in corn. That typically leads to a more volatile trade. One of my peers for a long time was a guy who loved to be long option volatility when it was above that and short it when it was below it, and it was a pretty good trade. I think we're going to have an exciting, call it 5 to 7 months. I don't think it's going to be as straight up as most people, as bulls would like. And I don't think it's going to break as far as bears would like. But Dustin mentioned it was very vague, right? Very vague in what they said. Getting some clarity there, getting some clarity eventually on supply, I think is going to be really important to how this shapes up. And one of the things that we've done in beans preemptively is, in theory, we supply ration by planting less acres. And that makes this a little different scenario than what we saw the last time we were coming out of a trade war. I think we planted 89 and 90 in the years leading up to that. But now we've got South America behind that as well. So I keep my eyes, again, I think that if you get negative weather in South America, I think beans get really spicy really quick. Until then, I think it's going to be a little bit of back and forth. I don't think it's going to be a straight up type of situation. I wouldn't rule out, I know this is horrible to say, but I wouldn't rule out a tweet this week from China that says something negative about the trade deal, or someone backs out. I mean, it's, again, going back to being conditioned for failure. I hope it's not. What we've been through the last 7 months has been absolutely mentally anguishing for a lot of people. So hopefully volatility is back. That'll create opportunity. I do think it creates a situation where potentially we have to have a genuine acreage battle into the spring. So we'll see how it shakes out today. I don't know that anyone really wants to be short 1060 beans, but I think right now you're just seeing covering. We have to see money come in behind that and see if they want to chase it higher. Looks like there's a big trade on here, trade war trade of long metal, short ags, and we could be in the early stages of flipping the script on that a little bit.
Awesome.
Yeah, I just don't know on that, like how to get money to come in after our markets. I think you have to see the trajectory of bullishness, if that makes sense. Like right now, it's kind of like, okay, like I shouldn't be short, to your point, or maybe, it's not going to pay me to be short right now. But I don't get the vibe yet of like doing the math, because that stuff didn't go away where South America keeps expanding. All those things we've talked about for months on the show hasn't really gone away. In the short run, you force the shorts out of the market. Maybe you get some longs to come in, but it doesn't feel like it's setting the stage yet, or I can't see the path of where it's like really bullish out forward. You know, it's like less bearish. But do you guys see something outside of like, okay, inflation, the dollar, you know, just natural, you know, maybe prices just got too cheap. But I really don't see the stage of like when you do the math where it gets bullish yet.
Well, and I think that's a good point, especially with corn. You know, Dustin's made mention, you've been mentioned before, of a really big safrinha crop that's still behind this that wasn't shipped because soybean exports out of South America were so big. So I don't know. I was trading text last night with a peer, and I kind of felt like if you were going to look at something to do, it would probably, from a trader's perspective, uh, that wheat and beans probably had more, or yeah, wheat and beans had more opportunity to rally than corn did. And that's not to say that corn won't rally. I just think that they are more explosive due to the wheat short and due to the possible, possible tightness in soybeans, and knowing that they've already, South America's already kind of shot their shot down there.
Yeah,
Certainly.
I think if you get, you know, if you break out of these ranges and you get, you know, another leg higher, I think you should probably take note of it. I mean, you do have basically $11 March beans. I mean, it could easily be $9. You know,
Yeah.
with a prolonged trade war, or I mean, so I don't want to lose sight of, we are quite a bit off the lows. And if you have, you know, good yields, you know, a lot of guys, it feels like they said, I'm just going to store it because I'm going to wait this thing out, right? And if you get really good prices and you've got good yields, like don't want to let that just kind of slip away too.
You know, I can go back to what your first comment about can't see it. And there have been times where we rally and we just keep rallying and no one can really put their finger on it. And I think those get to become the ones that can go a little bit further because no one ever believes it. And I hope that that's the environment we have. I think in corn, you could see a moderate rise in flat price and wide spreads. I just don't know how we reconcile the additional bushels. But and again, I think corn is relatively cheap, all things considered, when you look at cost of production and everything else around and what we see. But who knows? I think it's a good day to watch and see how the market wants to trade. Wednesday, Thursday, you get into first notice, first placement day for soybeans. Delivery end of the week, and I'm guessing any producer with beans on basis contract, if things don't change between now and then, they probably just roll them and take their chances that this is going to go a lot higher. That's what I would think. So we'll see.
Dustin, something to add there?
Yeah, I was just gonna say, Justin, before the show, you're like, you know, it's hard to trust it, right? Because we don't know how far does this even take us if we really have, you know, the most number of bushels we've had by a billion. Like the China could buy, and it still is lackluster on the corn side. So I think that, you know, you said it perfectly just now. Like, just be wary of it. Like, you know, we've been saying this for a while. Like the chance that we need to make it up through higher price and not through MFP payment is there, and this is just the beginning of those conversations. If this is really what China is going to do, so like options, you know, there's a lot of ways to just have floors and still leave upside open. When these are non-free market agreements that we're talking about, but from the time that we were in October 2020 till January 2020, beans were up $4 a bushel. So it's not like, I don't want to necessarily poo-poo this either, because we don't know what a non-free market Chinese buyer could do to the market.
Mm-hmm.
You know, they might say, well, it's going to cost us an extra $5 billion or $10 billion, but that buys us $40 billion in less tariffs. Right. And so you don't have
we talked about this. It's such a small, I mean, we talked about this a lot on the show. It's such a small number relative to the trade negotiations that are going on that it could cause massive, you know, dislocations in our markets, and they don't care. Like we said, like buy beans and throw them in the ocean. Who cares? Like they don't, it's just $1. It's just a check. Yes. So you do have to be mindful of that. And when we're talking about multi-year lows and option volatility with the potential outcomes, you know, I think it's a no-brainer to be an options trader here. as a
Right.
farmer or a speculator.
Yeah, that was my point. Is like you don't have to trust it, right? You have the
Right.
luxury of a 14 or 15% bean vol to go and just set your floors and see where it goes.
Absolutely.
Certainly.
I would just say that
Oh, good.
I would probably, from a trader's perspective, I probably feel a lot more comfortable being long the bean market after the deal was signed versus buying it up here and finding out that there was a hiccup or they got snotty with each other again. I think that would be a good way to get whipsawed. And I wouldn't care if it was above, call it 1070 no beans, if that was where you had to enter, because if something goes bad with this, we'll be right back down to 1040 before you can shake a stick at it. So it's going to be a long 4 days waiting for this thing to get signed.
Sounds like fun. We had a question come through from Matt Norman. Matt, thank you for posting your question. Justin, the question is: does this trade deal change or cancel the proposed MFP payment? I believe we had the same questions in the pre-show.
Yeah, Dustin and I actually talked about this last night. It could, I think think about it more overnight. I think the argument's going to be that there's already been pain caused to the soybean farmer. We missed a big chunk of our gut slot export business. So I think there could be a reasonable argument that there's already been damage done to the soybean farmer. Again, just throwing my political hat on, but I could see a path where they still try to pay the farmer, especially if we don't rally that much from here. But it's a good question, Matt. I mean, that's kind of one of my first thoughts was, is this a net negative for the farmer? Because we really can't rally flat price much, for all the reasons we just talked about. And then they could say, hey, we fixed it. No need for this big farmer bailout, right? We, deal done like we promised. So good question. I don't know the answer, but I think you could reasonably argue that you could still get an MFP payment. Just because of the time of year. Like if this deal was done in July, right, it'd be different. But now we've already, China's already secured a ton of beans through our gut slot of when we do most of our business. So I don't know the answer.
Well, I did want to add to that too, because Dan proposed this question after the banker meeting, right? Like, what should they be writing down for a PLC or Art County payments? Like, we have no idea, right? Like, it very well could be nothing if this is like 2021, where we just go up and the price makes up for it. And there's plenty of year left on the marketing year average that I would argue that right there tells you what they think the average grower received. If the MYA goes up to not even pay the strongest farm bill of, basically the last, as far as I know, like everyone was sure they were going to get the $60, $70 an acre payment as they're making harvest sales. They're kind of penciling that into their balance sheet. Like, this is what we project. It may be zero next October. If someone has to sell everything off the combine at $4 cash corn, let's say, and the majority of what growers are getting are $5 cash corn in January, like that's going to be a problem for that person, because probably no PLC or Art County payment, and who knows on this MFP payment now, and they're left with a $4 price, which we know is probably $1 below their break even in a lot of cases.
Certainly. Anything else, guys, before we go over to livestock? Ryland, what's going on?
Jack, what's up? So it's been a bloodbath on the cattle side. Obviously, the news of the potential, this meeting between the USDA and the Mexican Ag Minister this week to reopen the border shocked pretty much everybody. And it's just been an absolute risk off. No question about it. I mean, just kind of looking at some of the headlines over the weekend too. I mean, it really does feel like it just now the script has kind of been flipped here. The administration wants lower cattle prices, lower beef prices, and it's going to work out some deals to get that ball rolling. So, I mean, it sounded like there was even some negotiations between, or at least a conversation between Trump and Lula of Brazil about rolling back the 50% tariffs. So obviously all these things going to be pretty negative towards the cattle complex, no question about it. But there's going to be a lot of, I mean, hopefully there's some details, timelines, things of that nature revealed in some of these discussions, when it comes to the border reopening. I mean, just looking at kind of where the feeders were in May, they were trading around 296, where today, I mean, we're sharply lower, but you were closer to a 350 price tag. So, I mean, what that there does seem to be some potential if we do fully open the border to get get that length out of the market. So I think that's kind of inherent risk right now. So I mean, obviously we've got expanded limits today because we were limit down on Friday. So it just feels like that's more of the same, really, just a lot of negative news kind of in the headlines. But as far as just the fundamentals go, we didn't see a big drop in cash. We didn't see, any changes in beef prices. So the administration really wants to take care of this, really wants lower beef prices. I think they have to start with the packer instead of all these other avenues right now, just because it feels like that's the way all the headlines have been directed. And we have not seen, at least at this point, any change in fundamentals. So we'll see how it goes. We'll see what kind of details we get this week, but maybe there's some optimism from a Chinese deal, but we just haven't seen anything like that, any details yet on what exactly is going to be, the focal points of some of these things. So on the hog side of things, cash market $5 lower for the week. It just seems like this was kind of a cash-led break, and overall, it just seems like you just can't quite get the support we really need in futures right now. So maybe if there's some kind of details in the Chinese trade deal, maybe that gets us a little bit supported. Bellies were up $10, so we finally got a little bit of a bounce there. Congress was up, but it still feels like kind of a futures-led break, and cash markets kind of following along. So I expect kind of more of the same here, unless you get some kind of good deal news.
Yeah,
Awesome.
I'd just like to add, just as an outsider, no skin in the game here, but the market's over.
Yeah,
if you look at the cattle market, I mean, you might have one more run up, try to test some highs or something, but isn't just when it's over, it's over. It's been a hell of a run. I mean, it just needed something to spark it. But I have no skin in the game here, just observing.
I mean,
but that's how these big markets. Yeah, I mean, it's just how these markets trade.
It is. I think
it's been straight up for so long.
Right. And I think a lot of guys just wanted to see that big blow off top, the price quickly double from here, and then, now we can wash our hands with it. But, you've got the administration really pushing back on these prices right now. And like I said, it just feels like you kind of got to start with the packer. If you want retail prices down, that's a different battle altogether. But right now the sites are focused on wholesale, and that, that I agree with you.
Well, just talking about futures market though, like futures market, right? If you're again like a trader, you're like, I don't want any part of this.
Right.
Like when you have, outside pressure to do things like, to your point, yeah, the real solution is, the packer, things like that. But as far as an investor being, long cattle futures, right? You're like, no way.
Yeah, you may want to.
I guess that's my
side. I agree. It just, there's too much in the headline, too much pushback on it, and we really haven't seen a heavy amount of liquidation, in my opinion, on the live side of things. So the packer feels. I just feel like Packer's going to play some hardball. That's the only. That's my only 2 cents with it. Like, yeah, it's been a break. It does feel like it's over. You got a bad technical close. You got negative headlines, but like, there's 4 majors that are really controlling the entire supply. And getting retail prices down, I mean, just go look at a beef price chart. You may get a little bit of a change, but overall, that trend has been really strong. Maybe it flattens out for a time just to appease the administration, but
right.
We'll see. I'm with you.
Yeah.
It's a scary market now.
Yeah, I still ate steak this weekend, so I don't know.
I did too. So did my part.
Oh, love it. Sometimes the YouTube thumbnails make themselves. It's going to be like it's over and like a sad cow, like holding the hobo stick.
Sad platypus.
Don't do that. Yeah, we don't want that.
Yeah.
Just kidding. I'll think of something else. Anyway, looks like we hit the open about 9 minutes ago. Brian, what do those numbers look like?
All right, sounds good, Jack. Yeah, D-scoring's up 5.5 right now at 428 3/4. No beans 1064 1/4, up 22.5. Excuse me. And D Chicago wheat 526 3/4, up 14 1/4. So should be an interesting week in front of us.
Love to hear it. Well, if you like the show as much as we like putting it on, feel free to give us a like or subscribe. Helps us out with the YouTube algorithms, gets our show out to a wider audience, and it'll keep you up to speed on everything we're doing over here at AgYield. So thanks to everyone who supports the show, and thank you to Matt again for submitting his question. We're doing this every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate everyone's thoughts and comments today. It was a great show. Dan will be back tomorrow. And I hope everyone has a great start to their week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.